We have a big focus on this edition of Last Stick, and that is again on the IPO market here in India. Bear in mind, India's IPO market has been on a bull run on its own. It's been boom time. Literally every single IPO is listing at a 30%, 40%, 50% premiums. In fact, Suyash here tells me that now the market normal is that it has to be a 50% premium for it to even make the headlines. That's the kind of premiums which IPOs are being listed. But one IPO, Suyash, is in news. It's buzzing on our social media feeds. It's buzzing everywhere with news, interviews, and etc. etc. And that is the Mamaearth IPO, because that has been listed. Mamaearth has been listed, the cosmetics company. But Mamaearth's premium on listing is just about, what, 2 to 3%, Suyash? And yet, at a time when IPOs are listing at 50% premiums on average, Mamaearth, despite a 2 to 3% premium of a listing, is creating news like never before. Can you just decode what Mamaearth is all about and why is it making all these waves?
Certainly. I mean, there is a good reason for why Mamaearth's listing moved away for the new norm that we have been talking about, the 30 to 50% listing premium.
Yeah, well, first we'll talk about why is that the premium on listing for Mamaearth is so low.
Yes, let's look at how the stock did today. So it listed at a premium of about 2% odd. However, it faced initial sluggishness, but after it was able to move ahead I think in a couple of hours or so, it went on to touch an intraday high of about 340 rupees or so, which is about 5% higher from its IPO price. It finally settled at around 337, which is about 4% up for the day. Now I'll talk to you, talk why the stock and the listing overall was very muted. Let's first start with the financials of the company. Now, in the last 3 fiscals, Krishna, as you can see on your screen also,
that's the name of the company. If people who are confused, Mamaearth is the name of the brand of cosmetics they sell. It's the name of the websites, what you look for everywhere. But Honasa Financial, incidentally, is the official name of the company. Please go ahead, Suyash.
So Honasa Consumer has been moving in and out of profitability for the last 3 years or so. In FY21, it had a loss of about 1330 crores, as you can see. In FY22, it moved into profitability, posted a profit of about 15-16 crores. Again slipped into into losses by FY23, posting a loss of about 143 crores. So the the company has been slipping in and out of profitability. So there is clear trend that it's moving out of losses into profitability.
Okay.
Let's look at the margins also. Now the gross margins, which basically tells us how efficiently the company is managing its direct production cost, sits at about 65% to 70%. Now that's great, right?
Right.
However, the EBITDA margins, which also accounts for your selling and administrative expenses, other operating expenses, and is a proxy for your operating profitability, sits at a mere 1 to 1.5%. Now, compared to the industry average EBITDA margin for the entire industry, for the likes of your HUL, Marico, Emami,
FMCG industry,
FMCG and personal care at that,
yes,
is around 20 to 23%. So there's a significant decline over there.
All
and
right.
The biggest overhang for Mamaearth, Krishna, has been the ad spends. Now, the company has been spending aggressively on ads, and it's not necessarily bad. Of course, it's a startup. It will, try to promote, put its name out there. But the problem is the ROAS, the return on ad spend, which currently sits at around 2.6%. What does this tell us? This basically tells us that with these aggressive spends, they are able to bring on board the new customers, but they are not able to retain them. So there is no repeat customer base that's building up for Mamaearth. Now that is a big problem. Now let's also look at the peer comparison overall. As you can see on your screen, Mamaearth, compared to all its peers, has a negative EPS growth. It has an EPS growth of about 4.66%. Return on net worth is significantly below the industry average, and it's in the negative. It's at about 23% or so, whereas you can see for other players 20 to 60%. So clearly, as far as financials are concerned, it needs some time.
All right, that's one way of putting it. Financials are concerned, for us to understand any clear pattern of what's happening over there, because you can't go from 100 plus crore losses to about 15 odd crore profits and then back to 100 plus crore losses, nearly 150 crore of losses. we have to understand those numbers and we have to see how those numbers go forward. But bear in mind, Mamaearth does have a lot of advertising going for it in terms of star investors. You had Sushmita Sen, who invested 2 to 3 crore rupees inside Mamaearth. Bear in mind, it is the only comparison point, Suyash, I can think of is when you talk about Mamaearth's IPO and listing, you have to talk about the Nykaa IPO and listing as well. Another personal care brand which had great buzz, but the moment it listed in the stock markets, all that buzz went away. Avinash, one question and only one question on Mamaearth. The numbers are not making sense. Is this another Nykaa?
I think only time will tell this whether it is another Nykaa. But as Suyash really pointed out, the bigger concern is that the company has not been able to retain its customers. It's been able to get new customers, and that is definitely a big negative. Valuations have also been very costly. In fact, at the current valuations which was offered to the Indian public and to the institutional investors, I think there is no way this price could be justified. I would believe that the bigger issue was that out of 1600 or 1700 odd of public issue money, almost 1300 crores went to the promoters via an OFS. So that was also a big negative, because that clearly meant that the promoters wanted to encash the opportunity. And obviously this company does not manufacture anything, so they don't have any hardcore manufacturing asset. Everything is outsourced. So to that extent, I think markets would obviously like to see 1 or 2 quarters of performance, strong commentary, and of course the data points which actually matter to the performance of the company. If the management is not able to deliver on top line growth, profitability in the next couple of quarters, I think definitely the markets would be little wary of re-rating the stock going forward. So that's one of the major reasons why the stock got listed almost at its IPO price, and that is probably going to play a big role at least for the next 1 or 2 quarters before the numbers start keep coming out.
Now, Krishna, since Avinash brought up the valuations, let's go back in time. In December 2022, the first time the company filed its draft red herring prospectus, it commanded a valuation of about 24,000 crore rupees, right? Less than a year later, it comes out with an IPO at a valuation of about 10,000 crore rupees. Wow. So you have basically cut the valuation by about 60% in over a year. I mean, what happened over there? Was there a major trigger which created that negative sentiment? And as a result, we saw such a big cut in internal valuations. Second of all, I mean, I'm not sure even how do I trust that 10,000 crore valuation. To me, all of it seems like paper talk.
Well, all of it seems like paper talk is what Suyash says, but bear in mind, celebrity investors, it's a new age company, Suyash, difficult to, compare to all those old age companies you're talking about, Hindustan Unilever, Marico, new age company that goes with the D2C or direct to consumer technique of both marketing and selling. So that's Mamaearth's new age business model. So let's hope that we'll be able to understand that business model better, and more importantly, the numbers speak for themselves as far as Mamaearth is concerned, because at the end of the day, as far as markets are concerned, that's all they care about. The numbers have to speak for themselves. Their quarterly earnings numbers have to speak for themselves. And with that, I'm afraid we've completely run out of time here on this edition of Last Tick. I'm going to thank Mr. Avinash Gorakshakar, Director of Research at Profitmart Securities, for taking time out to be with us here on this edition of Last Tick. And of course, thank you, Suyash, for being with us here on this edition of Last Tick. It's a wrap here from my side for Last Tick.